Hello, good morning, ladies and gentlemen. I'm so sorry for coming in very late this morning. I had some technical issues I've been trying to sort out. I'm still getting myself used to these technicalities about the live session, um, YouTube live platform. So I've been bumping into a series of ways to find my way around this, but I know with time I get to figure this out. So I'm so sorry. So I welcome you guys to another promising session on the Morning Wednesday Live. And as usual, today we are going to be reviewing and taking a technical dissection on the various market structures that relates to the instrument that we have been monitoring since the beginning of the week. Well, it's a new month. Happy new month to everyone. I'm really excited to start the new month on a positive note. So, with that being said, here let's dive into the current chart. Well, we really do not have any fundamental drivers as at this morning, as in regards to the pairs that we have been monitoring. So, we shall be diving right into the current market structure using the technical parameters that we can find there to determine our trading opportunities for today. With that being said, here the first commodity we are going to be looking at this morning is the US oil. And in fact, on the US oil, we have been quite profitable on this pair as price action has consistently found higher lows, hereby giving us situations where we have multiple entries. Remember, we joined the move right above the $75.80 level. That was on Tuesday, that was yesterday. We added another position during the close to the New York session yesterday. We had another position, and then we had the situation running at this point. And during the live session yesterday, I laid emphasis on the importance of the structure and to further buttress the possibility of a bullish momentum here. Remember, we had this bearish trend line figured out after we cited the breakout retest of that trend line, and we all agreed that the appearance of a reversal pattern right above the trend line zone, or the trend zone area, was a beautiful signal for a trading opportunity. And the $75.80 level was serving as a beautiful neckline to further buttress that the reversal pattern is valid. And going into the New York session yesterday, I told you that if you had missed out on this opportunity, that we could either wait for price action to come back, do a retest of the 76 or the $75.80 level to incite another wave of bullish momentum. And if that does not happen, we want to be looking for opportunities at the breakout of the $76.68. And in fact, price action moved accordingly. As you can see here, we had a breakout of that structure, and price action moved about 120 pips thereabouts as soon as price got into that $77.85 level. We saw selling pressure, negating all attempt by the buyers to break out of that structure. And as a result of that move, price action dropped back into the $76 level, $76.68 level, and a level which was broken out during the course of yesterday's trading session. Remember, price action came back to do a retest of structure, and with the appearance of buy pressure above that level was a beautiful opportunity to join. And if you had actually joined from that level, kudos to you for being on standby to catch that move, as you will currently be running with about 80 pips in profit from that current structure. But if you had missed out on that opportunity, it's okay. Let's for those who are still in this trade, I will be advising us to move our stop loss to secure this current position by moving it to somewhere right around the $77 area as we monitor price action. So as we go into the new UK and the New York session today, how do we intend to trade the US oil? Well, if we look at the current structure here and considering what has been happening here since the beginning of the week, it is quite obvious that price action has been bullish. And if we bring out our line chart here to connect the series of higher lows, we have a bullish trend line that further emphasizes the strength of the buyers in this market. So I will be readjusting this bullish trend line to further buttress this, as this thing normally changes as price action evolve. So if we bring out our candle chart back, we want to do some readjustment to suit on the current structure here. So we should be having something like this. So as we head into the UK and New York session today, this bullish trend line here will be guiding our trading activity. And how do we intend to use this bullish trend line to guide our trading activity? Well, one thing we want to be rest assured of is that if price action continues to trade above that bullish trend line, we will definitely be comfortable in our buy position. So what this simply means is that we want price action to continue to trade above both the $77.40 level, which shares a beautiful confluence with that bullish trend line, to give us a further confirmation that buyers are still very strong in this market. Now, with the situation of things right now, you would notice that since yesterday's trading session, we have seen how the $77.85 level has been rejecting all attempt by the buyers to break out of that structure, and this is something of concern that we need to take into consideration of. And what this simply tells us is that the $77.85 level has a high chance of selling opportunity from that area. Look at the sharp rejection here, which happened during the New York session yesterday, and since the beginning of this morning, price is yet to test the high here, and not to talk of breaking out of the previous structure. And this kind of situation here further emphasizes the strength of the sellers at this particular point in time. So between the $77.40 area and the $77.85 area is a strong selling niche at this particular point in time. So we need to be very, very careful of thinking of buying. So because of this situation we have here, I have advised us to move our stop loss to around the $77 area as we anticipate another buying opportunity. Now, to buy the US oil during the UK and New York session today, we want to see an outright breakout of the $77.85 level, price action taking out all the sell positions within that area to give us a beautiful opportunity for another wave of bullish momentum. So we are not going to be thinking of adding more position here or buying the US oil only if price action breaks out of the $77.85 level, retest of structure giving us further confirmation, which also sits exactly above that bullish trend line for us. So we can have a buy stop order sitting above the $77.85 level in anticipation of the breakout of that structure. In as much as we are looking forward to a bullish momentum here, we cannot ignore the possibilities of sellers actually coming in this market. And considering the selling pressure we have been witnessing between the $77.85 level and the $77.40 area in the last 10 to 15 hours now, it is very likely that we might be seeing price action break down that bullish trend line for the first time this week. And if a breakdown of the bullish trend line happens, an area which also shares a beautiful confluence with the $77.40 area, definitely we shall be seeing this as a bearish signal. But remember that we are not going to be jumping into that decline right away, as we need further confirmation to give us that confidence to join that bearish move. And what we are going to be looking out for in the form of a confirmation is price action doing a retest of that $77.40 level or the bullish trend line here, and the appearance of selling pressure below the structures on our lower time frame will give us that further confirmation that price action is going to the downside. And if a bearish momentum happens here, that is price action breaks down the $77.40 level and that bullish trend line, then we might likely be looking at a TP target sitting along this bullish trend line that we have here. So if I zoom out the chart a little bit into looking at what has been happening here since Wednesday last week, remember that we identified this bullish trend line at the beginning of the week. And when we extend the bullish trend line to the future, we can see we have something like this. And looking at the breakout retest of this trend line here at the beginning of this week was you will notice that the retracement phase at this point is long overdue, as those who are taking advantage of the bullish momentum here will at one point want to be doing some profit-taking activities, which shall come in the reflection on the chart as a retracement phase to the downside. So if we have a breakdown of the $77.40 level as projected here, we shall be looking at our TP target between the $76 area and the $75.80 level, which was initially the support level for this week, and after which we are going to be looking forward to see how price action will be reacting to this trend line to decide if we are going to be adding more position to our existing trade, or probably get ready to join the second wave of that bullish momentum to the upside. So these are the things we are going to be looking forward to today. I always advise that you screenshot my screen so that you can use it as a reference point when you're about to make your individual decision. So to do a quick recap here, we have a bullish trend line which shall be guiding our bullish momentum here. And like I said, if price action continue to trade above both the bullish trend line and the $77.40 level, we remain comfortable in our buy position. And for those who are already in the buy position, we have been enjoying since the beginning of the week. I have told you to move your stop loss to somewhere right around the $77 area, as we anticipate a breakout of the $77.85 for another trading opportunity. But and I said, if price action breaks down the structure, then definitely the bullish buyers here will be negated at that point. So these are my views here on the US oil for today. So let's see how price action plays out, and by tomorrow we shall be coming back here to review what has been happening in this market. So moving on, I will be taking on the USDJPY, and on the USDJPY we have been witnessing some choppy situations here. And remember, since the beginning of the week we have been enjoying some bullish momentum in this market. Remember, I told you yesterday that we shall be looking out for trading opportunities. I think on Monday I told you I'll be looking out for trading opportunities at the breakout of this channel, as at the beginning of the week we were able to identify a flat channel here which fell between the 136.550 level. Let me extend this out a little bit so we can see what I'm talking about here. And we had a support level of the channel sitting at around the 136.00 area to give us that there is an indecision in that market. And I told you how I shared on my public platform on Tuesday, I think Monday night, that we should be anticipating a bullish momentum as we approach the Asian session. For the sake of clarity, let me show you that here. So we identified a simple setup on the 15 minutes time frame where we said a break. Okay, I think this is okay. Hold on a sec. All right, this is it here. So we were looking out for a breakout of the 136.250 level that was on Monday night to join that bullish momentum here, and this was exactly what happened. We saw the breakout of that 136.250, which is the area we have here right around this level. And in fact, price action moved about how many pips was that? Moved about 50-60 pips thereabout before we started seeing the selling pressure that resumed around this area. And if you remember vividly, during the live session yesterday, I was able to identify a simple setup here on our 15 minutes time frame. So for the sake of clarity, I will just zoom right into that 15 minutes time frame here to let you see what I'm talking about. So on the 15 minutes time frame, we identified a simple channel here which fell within the 136.750 and the 136.620 area. And at a couple of times we saw the breakout of that structure, which would have definitely triggered a buy position at that point, and I hope you moved your stop loss accordingly as price action moved in our favor. But if you didn't, well, you will be taking out, as I told you that we should be having our stop loss sitting right around the 136.620 level here. Now, one thing I also laid emphasis on here yesterday is that I wouldn't be selling the USDJPY unless price action breaks down the 136.550, which happened during the New York session yesterday, and I hope you are able to take advantage of that move as price action moved significantly well in our favor. As you can see, it moved about 85 pips in profit before we started seeing this bullish momentum here. So congrats to those who are taking advantage of this opportunity as well. Now, as we head into the New York session today, what is going to be our plans? What are our expectations? What are we looking forward to on the USDJPY? Well, since we really do not have any fundamentals to anticipate, well, we are going to be looking at the current market structure to decipher what our next line of action will be. Now, let me delete all those ones as they are no longer relevant here. And let's look at the current structure from an holistic point of view. So look at what we have right now. We had this impulsive move to the downside yesterday, which happened. And we can see that there is traces of selling opportunity below the 136.00 level, as we saw a breakdown of that structure happen here during the later part of the New York session yesterday to give us a signal that we might be seeing some selling pressure come in from the structure. And as a result of this, we had a buying opportunity come in, which appears to be the retracement of this impulse leg. And if we take this impulsive move into consideration, we shall be seeing this as a retracement phase. And bringing out our Fibonacci retracement tool, you will notice that price action retraced into our golden zone area, which is always between the 50 and the 78.6% area to incite another wave. And since price action had formed a reversal pattern around the 50 and the 61.8%, we have been witnessing some bearish momentum here. Now, what we want to be doing now to join this decline to the downside is to position ourselves right below the 136.00 level. So if you had joined this trade below the 136.00 level, kudos to you. And I will be advising that you place your stop loss somewhere right above this structure here, which is about 48 pips. Now we want to ride the move all the way down, and in order to know where our TP target will be, let's scale up a little bit into the 4 hours time frame. And if you remember yesterday, I shared some situations here on the USDJPY on the 4 hours time frame, where we looked at what has been happening here since the beginning of this month. And since the beginning of this month, you will notice that price action has been bullish, and in fact it's transitioned into an ascending channel that you can see here. And I told you that if price action breaks down that 136.550, which was broken yesterday, and lucky enough we were part of that position, we might likely see a situation where price will retrace back into either of this bullish trend line here to incite another wave of bullish momentum. So we should be having our TP target within the structures here. We could have one at the 135.300, depending on how price action reacts to the structure will determine if we are going to be extending the TP target or not. But be rest assured that I will be jumping in the comment section of the USDJPY publication on my TradingView platform to give you an update on how to manage that. So we have structures like the 135.300 level, we have the 135.00 area, and then we have the 134.500 area. These are all structures that has a potential of holding our TP target at this particular point in time. And if I extend the support level of the ascending channel here, you can see what we have. So what we are looking forward to right now is the way the selling momentum is happening currently in the market here. There is a likelihood that we might have a retracement back into the support level of that channel before another wave of bullish momentum will happen. And if it so happens that a breakdown of that structure happens, then we'll have no choice than to anticipate another wave of bearish momentum. So you can put your maximum TP target at the 134.500 level, and as soon as price breaks down this kind of structures here that I have highlighted, you want to be moving your stop loss accordingly to secure your current position. So at this point in time, it's more bearish for us for the USDJPY for today. So we have a reversal pattern here. If you look at the 4 hours time frame, price action continue to find selling pressure around the resistant level of that ascending channel. So we continue to look out for more selling opportunities below the 136.00 level to add more position to the USDJPY. So for the USDJPY today, we are going bearish on this one. Now moving on, we went on to talk about the XAUUSD. And on the XAUUSD, we are beginning to notice some bullish momentum here. And if you are following me on my TradingView platform, you would have been part of this buy position that we have here. So this is what we saw during the live session yesterday. We were around where were we during the live session? Yes, okay. We were around here during the live session yesterday, and we begin to notice that buy pressure has begin around that area. And I also laid emphasis on the fact that the 1,807 level has given us a sign at the beginning of the week that we might be, that area is a strong buying niche for participants in this market. And what we saw during the live session yesterday was quite interesting, as we saw a sharp rejection of that structure, which I laid emphasis on, and I said if price is unable to break down the 1,807 level and the buy pressure here continues to get stronger, then we want to be positioning ourselves right above the $1,814 level to trigger our buy stop order. And remember, I told you how that area shares a beautiful confluence with that bearish trend line that has been guiding selling momentum since the beginning of the week. And I said if a breakout of both the 1,814 and the bearish trend line happens, it's a beautiful sign that the bearish trend line may no longer have the capacity to continue to hold that bearish momentum. And this is exactly what we saw here. Price action broke out of that structure, and price action had continued to find higher highs here. So we had position triggered at the breakout of the 1,820 level. And I also shared this on my public platform during the during the later part of the New York session yesterday. I shared this on my public platform that we shall be looking for another breakout of the 1,830 level to join that rally to the upside. So currently we have about 3 positions running in profit right now. The first position here, the second position here, and the third position right above the 1,830. So we have a total of about, let's see how many pips that is. So the first position is giving us about 2,000 pips in profit. The second position after triggering is giving us about 1,400 pips in profit. And the third position is currently running with about 350 pips in profit. So kudos to everyone who has been part of this trading opportunity. Now, if you had missed out on these opportunities here, and if you are still in this trade already, we'll still have a tendency that price action, the market will be giving us another chance to join this potential rally to the upside. So we have positioned ourselves somewhere right above the $1,836.50 level here, where we have a buy stop order to trigger another wave of bullish momentum here. So I will be looking forward to another buying opportunity above the structure as we continue to monitor price action. And one thing I would like to state here is that all our stop loss on the current buy position we have, and even the future buy position we are going to be having, shouldn't be below the 1,830 level. So anywhere around the 1,830 or a little bit below the 1,830, if you want to give some room for price action to breed, you can have it somewhere below the 1,830 level for to mitigate against any yield risk on the XAUUSD. So let's see how this is going to be playing out. And some people have been sending me messages asking where will our TP target be on the XAUUSD. Well, if we look at the structure from an holistic point of view here, that is, if we are going to be looking at it on the higher time frame, one thing we should take note of is the fact that price action has broken out of that bearish trend line that we identified at the beginning of the week. And this is a beautiful sign that the trend line is no longer strong enough to continue to hold that bearish momentum. And in fact, following that reversal pattern we identified here, well, I think this bullish momentum will continue to move to the upside. So I will be suggesting that a maximum TP target falls around the 1,860 level. And if you look at the 1,860 level in the past, you will see how this level also has been a major determinant of price action. So we are going to be having our maximum TP target at the 1,860, and let's see how far this momentum is going to go. And if price action gets within the 1,860, it now depends on how it reacts to that structure that will determine if we are going to be adding more position to our existing buy position, or we might be getting ready to join a bearish momentum from that level. But be rest assured that I will be jumping right in the comment section to give you an update from time to time in that regard. So at this point in time, we are going to be positioning ourselves right above the $1,836.50 level to join a bullish momentum here. And one thing I stated here is that if price action ever comes back down the 1,830, it will have taken us out of on all the buy position we have here, and selling pressure below the structure will definitely be inciting a bearish momentum to the downside. So the 1,830 level is going to be our yardstick for trading activity for today, as if price action continues to trade above the 1,830, we'll remain comfortable in our buy position, and if it breaks down that structure, we look out for selling opportunities at that point. So that is that on the XAUUSD. So I will be moving into the last pair for today, and that is the GBPUSD. And on the GBPUSD, we have been witnessing some choppy situations here, though since the beginning of the week we have been enjoying some bullish momentum here. If you remember vividly, we were able to join the breakout of this channel here on Monday after price action broke out of the 1.19650 level, and price action continued to find higher highs, and we were lucky enough to add more positions at breakouts of structures like the 1.200 level, 1.20250 level, and then we also had another position here at the breakout of the 1.20600 area. And price action moved significantly well until it got into the 1.2100 area after we started seeing selling pressure, which led to the breakdown of the bullish trend line. And if you remember what I said yesterday, I said the bullish trend line here shall be the yardstick for trading activity yesterday, as price action remaining above that bullish trend line will give us more confidence to stay in our buy position. But if it so happens that a breakdown of that bullish trend line happens, we'll definitely want to be thinking of selling the GBPUSD. And at the sight of this engulfing candle that broke down that bullish trend line, it was a beautiful signal that we want to be joining a decline at that point. And I shared this on my public platform, that was yesterday. Hold on a second, let's quickly run through my commentaries on the GBPUSD. So on the GBPUSD, we had this commentary.
Hello, everyone.
Stated on the, okay, hold on a second. Let's see after identity. Okay, so we have the bullish trend line here, and I shared this. I said the US dollar has begun to accumulate buying pressure. Is it at this point? Okay, hold on. Okay, yeah, it's at that point. So I said the USD US dollar began to accumulate buying pressure across its major pairs, and it appears there are traces in this market structures as selling pressure continues below the 1.20600 level. So we shall be using the newly identified trend line as a yardstick for certain opportunities. That is, if price action breaks down that trend line, we shall definitely be looking out for. Okay, I think, okay, that was previously. Okay, that was yesterday's own. Is this secure all buy position as we remain bullish as long as price continue to trade above the bullish trend line. A breakdown of the trend line has a tendency of negating that bullish momentum here, and that was exactly what happened, and we saw price action break down that structure, though we had some selling opportunities here, and price action moved about, let's see, how many pips was that? It moved about 50 pips in our direction before this bullish momentum happened. And at the beginning of today's session, I shared this on my public platform where I said we are going to be looking forward to a breakout of the 1.20600 level to buy the GBPUSD. And the reason why we are buying at that point is because of the resumed buy pressure we have observed here at the 1.20250 level, which has been negating all sellers' attempt to break down the structure. And this is a very strong reversal pattern, as you can see here. In fact, I missed out on that reversal pattern as this happened in the middle of the night, and I didn't have any pending orders in that regard. So this is the neckline of that reversal pattern here, which falls around the 1.20400 level, a strong psychological area. I would like to label this point for the sake of clarity, just in case price action come back to do a retest of that level. So let's have that area figured out, 1.20400 level. So what we are going to be looking out for now, since we already have the breakout of that neckline area, and you all know that from a technical standpoint, whenever we do have a breakout of structure like this, there is still a likelihood that price will come back to do a retest of that level in anticipation of another wave of bullish momentum. So that is why I have a huge stop loss zone which covers about 35 pips, hoping that if price action drops back into the 1.20400 level, the appearance of buy pressure around this area on my lower time frame will welcome additional position to the existing trade. And if price action continues to find higher highs here, a breakout of the 1.2100 level will be welcoming additional position. So I would advise you screenshot my screen so that you can use it as a reference point when you're about to make your individual decision. And for those who are following me on my TradingView platform, definitely you shall be seeing my update at key moments when the market structures evolved into a very important structure to trade. So on this note, I want to wish you best of luck today. It has been a wonderful moment with you guys. I really appreciate your attention, and let's come around again tomorrow 8 a.m. UTC as usual. And once again, I'm sorry for being late this morning. It was due to some technical issues. I hope I get better with time. Thank you once again, and I wish you best of luck. Happy New Month, everybody.